L.A. Smith here from Kingdom Knowledge. More and more people are waking up to and accepting the fact that the U.S. stock market is and has been manipulated for years. A lot of already wealthy people who are in the know have become even wealthier from inside information pertaining to market manipulation. Many of them are in politics, as 60 Minutes has reported on. If it is true that the market is being manipulated, then it is also true that its current value is most likely not accurate. So, how much are your stocks really worth? This story should give you insight into that question.
A report from the Federal Reserve Bank of New York suggests that the bulk of equity returns for more than a decade are due to actions by the U.S. Central Bank. Theoretically, the S&P 500 would be more than 50% lower at the 600 level if the bullish price action preceding Fed announcements was excluded, the study showed. Posted on the New York Fed's website Wednesday, the study sought out to explain why equities receive such a high premium over less risky assets such as bonds. What they found was that the Federal Reserve has had an outsized impact on equities relative to other asset classes. For example, the market has a tendency to rise in the 24-hour period before the release of the Fed's statement on the interest rates and the economy, presumably on expectations Chairman Ben Bernanke and his predecessor, Alan Greenspan, would discuss or implement a stimulus measure to lift asset prices. The FOMC has released 8 announcements a year at 2:15 Eastern Time since 1994. The study took the gains in the S&P 500 from 2 p.m. the day before the announcement to 2 p.m. the day of the statement and subtracted that market move from the S&P 500's total return over that time span. Without the gains in anticipation of a positive Fed action, the S&P 500 would stand at just 600 today rather than above 1300. The chart shows the effect to be significantly pronounced in the aftermath of the tech bubble when Greenspan reinflated stock and housing prices by slashing rates. It widens even further in the period since the financial crisis of 2008 as the market became beholden to the Fed's use of its balance sheet to add liquidity to the market.
Clearly, the stock market is yet another bubble. It should make more sense now why its value and performance does not reflect the dire state of our current economy. How is it possible that net earnings and earnings per share of our corporations remain the same or increase with so many people out of work, no growth in GDP, and consumer spending decreasing and or remaining stagnant? Who in the heck are these corporations selling to? That would suggest that our corporations are doing a lot of business abroad. Even if that were true and the goods are also being made abroad, that's not beneficial or helping the dire economic situation of the average American. Anyway, this story makes it very clear that the equities market is yet another worldly system full of deceptions. However, the most grand deception pertains to the very thing that is holding the stock market up and actually the entire world economic house of cards, and that's the dollar. It remains in demand across the world because it is used for international trade. This is why the Fed can print more or electronically infuse more of it to sustain the U.S. economy and the stock market. However, every time the Fed does this, the world cringes because their dollar reserves take a massive hit, making them less wealthier as a result of the increase in the money supply. However, at the same time, countries do not want to see the U.S. economy and the dollar totally collapse because they know that that will cause a worldwide economic catastrophic tsunami that absolutely no country can escape. This story provides yet more evidence highlighting the fragility of the world and why our trust and faith should be placed elsewhere. Put God first. Thanks for watching. Peace and love.
Thanks for watching Kingdom Knowledge News.